Hello traders and investors, this is Sal for Expo Futures. I'm going to cover a little bit of an update here, just to give you an idea of what's going on right now. I'm going to start with the ESOH. We've already started to move on contracts to the March S&P. So ES0H, and as you can see, I've plotted a few moving averages just to show trend. I'm showing the 100, the 75, and the 50, or if you prefer 50, 75, 100. But just showing here that the trend in the short term is still up. And in the longer term picture on the daily, which is I'm showing the 480 minute, which is 8-hour bars, it is also up to slightly neutral. So this is what we have here. We have somewhat of a rectangle, but it's bullish as long as it stays up in the higher end and higher. It is slightly overbought, and if it breaks out of this range, that would be bearish. These are the levels: 1080 on the S&P, and this is of course the March contract. Below 1080, that's bearish. That would be below the moving averages. The mean is somewhere in this 1080 range. We are at 1106, 1107, and actually 1108. So the trend is still up. This setup here still would show that we should be able to test an overnight, because it is slightly, it's still in the trend. As long as it's still higher highs and higher lows, that's still an upward trend. So stops need to be taken out. Same thing with the euro. The euro is slightly downtrend, but it's been trending upward. Moving averages are showing downtrend, and this is the 30-minute bar. I'll jump over to the dollar. This is the hourly chart, and for some reason it actually looks like the dollar is correlating with the S&P, and as you know, it hasn't been that way. So keep that in mind. Gold is correlating with the euro. It is slightly going to flatten out and go neutral, as you can tell, but it's not bullish until it takes out the closest high, which is this 1142 level. So until then, it's got a lot of base building to do. I'll jump to silver. Same situation, downtrend, but it looks like there might be some accumulation. And as you can tell, there was that high that we made. We have lower lows and lower highs, but we are due for a retracement. And those are always dangerous words, due for anything. So $18.22, $18 an ounce, 22 cents. We're at 17.4. Let's see what it does, but it doesn't start till it takes out $17.60. Crude oil seems to be also very interesting because it did have that larger sell-off, a steady continuation, but it is looking to build a base at the 72 level. 71 to 72 seems to be the level, breaking above 72.40 and 72.50 would be bullish to 73. If we can see some real strength there, then we might have some mean reversion. And here's a fib retracement. If we do break that 72 level, then we see higher levels up to about 74.5. But you know, it's a lot of ifs. We have to see some strength. If not, we can test these lower 70 levels, mid 70 levels. And this is on the CL0G, which is the February contract. Okay, so those are the levels I want to point out. Stay tuned, but notice how different moving averages will give you a different look. This right here, this is a 30-minute, but the S&P mini, this 20 does not give as many clear signals of the trend, just more of the quote-unquote noise. But these moving averages, the 50, 75, and 100, give you a clearer indication of what is noise and what is not. The trend is still up, and it's still not kissing that 50, but as long as it doesn't pull back through these lower levels, we still have upside on the table. So stay tuned for that. Breaking below that, you know what to do. Going higher, you know what to do. Stay tuned, take care, and let me know if you have any questions.